Hey, soldiers, JP Morgan is the latest large national bank to come out and say they don't see a recession happening. But we've got another key metric that defies that notion. And we're going to take a look at that metric. It's called the gross domestic income. You've heard of the gross domestic product. Let's talk about gross domestic income. So that's what we're going to do in that order. Look at what JP Morgan said about the recession and how they don't think that there's going to be one. Why would they do that in light of this gross domestic income figure that we'll go over? And there is a discrepancy in that figure that is cause for concern. Finally, we're going to ask the question, why are the banks afraid of this recession? Because, we did the profile of Bank of America just a few days ago saying pretty much the same thing, that they didn't see a recession coming. Now, look, I want you all to understand a couple of things. We do these videos not to stoke fear. This is not about fear at all. This is about forecasting. I want you to know where you are in the water. The mainstream media does not have time nor inclination to report deeply on these issues. They'll give you a headline in about 3 or 4 minutes worth of, what they call substance, which is basically the talking points that their sponsors and or the government have given them. All right. Do you really think that CNBC is going to be totally upfront with you about why JP Morgan and Bank of America are saying they don't see a recession when those institutions and other financial institutions are their sponsors? Really? Okay. If you think that, I've got a bridge for sale. So I want you to understand this is not about fear. It's about forecasting. I want you to know what is really going on, and that's what our focus here. Also, I want to take a moment to thank every last one of you, over 5,000 soldiers of finance. We just crossed the $5,000 mark, and I really appreciate you for that. Now, if you haven't become a soldier, it's easy to enlist. Just hit the subscribe button. Let me know if you're a recent subscriber. I will salute you in the comments. Now, JP Morgan's U.S. chief economist is no longer forecasting a recession during 2023 because Q3, or the third quarter data, is indicating healthy economic growth. Is it? We went over the vehicle repossessions rising, especially for the subprime loans. They feel it first, right? We went over the rising foreclosure figures, and we went over the $1 trillion in national credit card debt collectively, okay? That is what you call a handsome ransom. And we also went over the fact that, sure, Americans are spending more, but inflation is up. So wouldn't that follow? Yeah, sure, we're spending more. JP Morgan's North American economic research team now expects real annualized gross domestic product growth of 2.5% in the third quarter, compared with its earlier view of 0.5%. Quote, given this growth, we doubt the economy will quickly lose enough momentum to slip into a mild contraction as early as next quarter, as we previously projected. Now, a couple of things with this. They were forecasting 0.5%. That's not a contraction. It's very slow growth, but it's not negative growth. All right. So they're cooking the books here, the government and these large corporations. That is what you have to be acutely aware of. And then they're saying, we forecasted a mild contraction. We'll get to why they're scared of a recession in just a moment, especially at this particular time in the country's economic history. The risk associated with the debt ceiling and bank crisis from earlier in the year have faded. Although we did see a bank failure here last week out in Kansas, I believe, small bank, but a failure nonetheless. It means something to the people in that community for sure. Although tighter bank credit weighs on the economy, sure, because the interest rates have been hiked. Meanwhile, the possibility of healthy, non-inflationary growth has increased. This is according to this gentleman, Michael Ferroli, who's a JP Morgan analyst, pointing to improved productivity in the second quarter and an increase in labor supply. That doesn't mean the U.S. economy is in the clear. The risk of a downturn is still elevated, especially if the Federal Reserve hasn't finished its rate hiking path. So, okay, so they're kind of hedging their bets there. Even if the risk remains subdued, Feroli expects growth to slow to a subpar pace next year. He points to a tighter credit and to tighter bank credit and fiscal headwinds, including the restart of the student loan program. His team expects real gross domestic product growth annualized at 0.5% in the first quarter and at 1% in the second, third, and fourth quarters. All right, so let's take a look at a number called the gross domestic income. Now, hang with me for a moment here, because you hear about gross domestic product all the time. That is one of those numbers they throw out there into the mainstream media, but again, they don't have the inclination or the time to really drill down into these other metrics that we should be looking at. Gross domestic product is the total monetary or market value of all the finished goods and services produced within a country's borders in a specific time period. So it's the market value, okay? Total market value. It's important that you keep that in mind. Total market value. Now let's look at gross domestic income. That's the measure of a nation's economic activity that's based on all of the money earned from all of the goods and services produced in the nation during a specific period. So we've got the money earned, right? Actual dollars coming in the door with gross domestic income, all right? And with regard to the gross domestic product, remember, we said that is the market value. Market value versus money earned. Now, let's take a look at a discrepancy that we've seen here with regard to the two. They should correspond and correlate very tightly, but the Bureau of Economic Analysis released its final estimate of first quarter 2023 GDP. The GDP versus GDI discrepancy is one of the largest ever. So is this indication of some cook in the books? Again, these should align. So are we seeing the GDP number manipulated to tell a story more rosy than it really is? Gross domestic product and gross domestic income are two measures of essentially the same thing. They are supposed to match and will over time with revisions in at least one of the measures, okay? Real final sales is the bottom line estimate of real GDP. The word real means inflation adjusted. Today, the Bureau of Economic Analysis released its third estimate of first quarter 2023 GDP and GDI as well. So with the GDP, we have 2.0% in the first quarter of 2023. And in the fourth quarter of 2022, we have 2.6. That's GDP. Now, as you can see from this chart, the gross domestic income for the first quarter of 2023 is negative 1.8%, and the fourth quarter of 2022 is negative 3.3%. So, again, this is just more of the same in terms of us being very suspicious of the numbers that are coming out of the government. Remember, unlike these companies, if the government cooks the books and manipulates the data, no one's going to jail for it, all right? You can't do that in a publicly traded corporation. Now, why are they so apprehensive about a recession? Well, because of the environment we're in, where we've seen bank failures, we've seen stress on the banking system. And if there is a recession, especially one that's deep, we're going to have individuals wanting to get their money out of the bank. They're going to need to, because they may face layoffs. We just went over the jobs numbers in an earlier video a couple of days ago. They're going to need to pay these inflated bills, including grocery. utilities, gasoline. Kids are going back to school. They're going to need supplies and clothing. All of these prices are elevated. So if they are telling the truth and saying, well, look at this gross domestic income number, look at the gross domestic product number, if they were to match up like they have in the past, then consumers might get a little fearful themselves, right? But no one pays attention to the gross domestic income number except us here on Soldiers Finance. So therefore, we've got to take into account the discrepancy between the two. And that's why I suggest that folk be very judicious about their money right now. Put off these large purchases, vehicles. Maybe you just want to. I never understood people say, oh, well, that's going to cost $1,500 to fix. It's going to cost $1,500 to fix that transmission. You should just buy a new car. Well, wait a minute. So you're telling me I got a paid off car here. I'm going to spend $1,500 to extend the life of the car. Okay, that's on the one hand. But you want me to go, you're suggesting that I go and I incur an $800 a month car payment, that's the average nowadays, and saddle myself with 5-6 years of debt with that car payment for a depreciating item. That's what you want me to do, right? So I never understood that. If you want a new car, look into extending the life of the car that you have, all right? Because if you amortize it across the amount of years that you've owned it, it becomes less expensive with each passing year, okay? Kind of evens out that depreciation. If you're going to buy a car, look judiciously at the pre-owned market. Now, I know there's been some variances there where pre-owned cars have been almost as expensive as new cars, but search around. Big purchases of liabilities that saddle you with debt that's not going to be correlated with appreciation in value probably is not where you want to be right now. The banks want you to think that everything's okay so that you can continue to take out loans for cars, for credit, and, get deeper and deeper into slavery. I mean debt. All right. So think seriously on that, guys, that gross domestic income versus gross domestic product. CNBC ain't talking about gross domestic income, but we certainly are talking about it here. Now, there was another video we did, which went over a recession signal. We delved deeply into rising foreclosures. Go check that video out. Guys, I'll talk to you soon.